Oh, we're live. Hi, Amy. Welcome to Venture with Grace. I'm sorry about the dramatic reaction at the very beginning every day.
Good morning. Thanks for having me.
Okay, to start the show, I would love for the audience to get to know you a little bit more. So you started off at like a trading floor, and then you work at Summit Partners, and your parents love rock and plants. But anyway, sorry, those are things I learned about you from other podcasts. But why don't we start with like what were some core lessons that you've learned before you enter the world of venture?
Yeah, of course. Yeah, my first job was on an equities trading floor at JP Morgan. And so could not be, more different in terms of the finance world than where I am today at Costanoa. And I think the core learnings for me were really that curiosity, I think, is one of the most important forces as you think about your career. And for me, that curiosity about businesses and how they were built and why stocks moved really started when I was an equities trader and drove me to want to get closer to early stage companies. And in trading, you're focused on geopolitical events and maybe some fundamental strategy shifts inside of businesses, but you're at a much higher level than you are when you're working closely with companies on the venture side. And so for me, that original curiosity that took hold when I was trying to understand why stocks were moving on Wall Street was what really drove me to want to go to earlier stage investing and spend more time working much more closely with founders. And so I'd say the biggest kind of lesson there was like to follow your curiosity and be sort of relentless in, hey, if you're interested and excited about following a thread, like go pull on it because you don't know where it's going to lead you. And then I think the second component of that is just being really relentless, right? Like I never thought that I would make it from a small liberal arts school to venture, but I think being relentless about my excitement about working in this field, I was able to navigate that.
Totally. I wonder, so like since you mentioned about like, curiosity and then also like the general landscape of the economy, that how that kind of like shift how people invest. I wonder how would you say like, right now, is there any big trends that you feel like on the micro level that's kind of like impact venture investing in the coming 2025?
I think rates are the biggest one, and it's been so interesting throughout the last few months, right? We saw the Fed first lower rates back in September, and then again in November. And I think that's driven, a bunch of the venture activity that we've seen really through the fall, but especially I think sort of post the beginning of November, it really felt like things started to pick up, especially in later stage investing land. And it's hard to believe that some of that isn't at least partially driven by rates and sort of the signal that we're seeing from the Fed. And then I think, the other macro component here was the Service Titan IPO going well. And I hope that means that we're going to see others. And we've been saying for the last, I don't know, 4 or 5 years, maybe even last decade, I don't know. Every year it's like, okay, this year is going to open the floodgates for the IPOs. And some years that happens and some years it doesn't, but especially the last few years, that's kind of been the theme of the fall. And I don't know, I'm maybe I sound like a broken record, but I'm optimistic that that's going to be the case for next year. And I do think Service Titan was sort of the bellwether for that and that IPO going incredibly well for them. So I'm hopeful that the combination of those two things are going to drive a really good both in the M&A environment in 2025, but also in IPOs, and that of course ends up flowing through into later stage investing. I always say that the early stage investing scene is probably 6 to 12 months behind later stage. And so we'll see how much it impacts seed and series A investing. My guess is that if it does, it'll be a laggard. But we've already seen, I think, seed and series A, start to pick up to levels that felt kind of like ZERP era levels of both pricing and volume, especially in the back half of 2024. So yeah, I'd say it's going to be a story of rates and the IPO market potentially opening up in 2025.
Totally. I wonder when it comes to like maybe we could start with like giving the audience a little bit more background on like Costanoa and what are the things that you guys are focusing on before we're diving into AI, fintech, and everything else.
Yeah, it was hard for me not to mention AI in that, but I was trying a high macro level approach. So quickly on Costanoa, we were an early stage firm, pretty much exclusively focused on B2B software. All of what we do is investing from company formation through product market fit. So think investing as early as company formation seed rounds, and then we'll invest as late as Series A. And for us, that's usually leading rounds. We'll write checks from 2 to 12-ish million across those categories. We've been around for almost 13 years now, started by our founder, Greg Sands, who was a longtime partner at Sutter Hill and then left in 2012 to found a company that was focused on, at the time, what was Series A investing, which was writing, $2 to $5 million checks into much smaller rounds than what today we would identify as Series A. But he saw a hole in the market of needing more small boutique firms that were sort of taking the USV benchmark approach and being industry and thesis driven and hyper focused on the founders that they work with. And that's what we've really strove to build over the last 13 years, and I think what we've accomplished so far. And yeah, we're investing out of our fifth fund, and 5 partners at the fund, and including myself. And we look at, I'd say, B2B software broadly, but I would think as SaaS and applied AI is one pillar, fintech and insurtech is another, cybersecurity, national defense, and then data and AI infrastructure, developer tools, etc. And then of course there's stuff that we do that falls outside the bounds of those specific pillars. But those are the main areas where we spend the bulk of our time.
Totally. I know that you help them kind of like build up their global investing. So like since you have invested in like companies like globally, as well as like a lot of like, so like some of your investment are in the fintech sector, maybe we could start diving into, when you joined the firm, like what was your kind of like sourcing and diligencing strategy, and then we can dive into the specific companies that are doing very well in the portfolio.
Yeah. I joined in 2019, so pre-ZERP era madness. But joined in 2019, and we were, I would say, early days of kind of fleshing out a fintech thesis. We had made a few investments. Most of those had been in payments, but we hadn't done much beyond that. And I think we felt that in 2019, fintech was just starting to become a super buzzy category. There was lots going on in neobank land, and a little bit going on in fintech infrastructure, but there hadn't been that kind of rush that happened in 2021 and 2022 yet. And so we were really interested in understanding where we should go spend our time. And my colleague, Mark Selko, and I were the two that spent the most time on our team digging into that. And so for us, we really started thinking about fintech holistically. Could you invest in fintech and just be focused on the US? Or did you have to think a little bit more globally and start to think about Africa or Latin America or even just Canada, right? As other markets that had big abilities to drive and build massive businesses, whether that was in payments or infrastructure and the like. And so for us, I spent a lot of time thinking through that strategy and came away believing, one, there was a global approach here that we needed to take, but that we still felt that the bulk of our investment in those categories, specifically payments, fintech infrastructure, insurtech, would still be driven in the US. And so a lot of our sourcing, I would say, was thesis driven, but of course, it's probably 50-50, right? 50% that we're spending time, hey, fintech infrastructure, banking as a service at that moment was just becoming a thing. And we were really trying to understand, was there a thesis driven approach to sort of go after that? Or should this be more, company formation, founder driven approach? And so maybe I'll highlight a couple there. So one was a company called High Note that we led the seed in 2020. And that was a business where we'd been thinking a lot about, every company is becoming a fintech. And so what does that mean for fintech infrastructure? And so we'd thought a lot about banking as a service in a more traditional sense. Of course, companies like Unit and Treasury Prime came out of that era, but then also trying to understand, were there companies in the card issuance space that could be sort of Marqeta 2.0. Marqeta was really expensive. And so we've been spending a lot of time from a thesis perspective thinking about this category. And so when we met John McElwain, who had been the GM of Braintree inside of PayPal, had been very senior at Visa, and he had this vision to build this virtual card issuance platform and eventually pair that with acquiring. We were just blown away. And so that was one of the earliest fintech investments that I made at Costanoa, was working with that high note team in I think that was the fall of 2020 when we made the original investment. And so I'd say some of the sourcing is very thesis driven. This one was sort of combination of like, we've had this thesis, we were really excited about this category, and then through our network met John, and the two things just sort of paired perfectly, of like prepared mind, able to move really quickly, but also, incredibly high quality founder that came in through our network.
Totally. I want to maybe double click on like the two mega trends that you were talking about. Like, so in 2019, back in time, there was a lot of like neobank, and there is just like, the fintech thesis that you guys are having about like global instead of just like, the US. I wonder why do you feel like back in time the neobank was like popping up, and then like how do you think about like the fintech strategy today, since I feel like it's very different from like 2019, and what are some like big trends that you're seeing in the space?
Yeah. So first part of the question first, around kind of what we were seeing in 2019. It's really fascinating to go back and try to do sort of the post-mortem of what was going
Mhm,
on. And I
mhm,
think part of it was 2018, 2020, 2021, right? All of this sort of, fintech up into the right era. I think a lot of it was, there was so much money because it was a ZERP era. And so I think a lot of these neobanks that required a lot of capital, it was sort of the perfect time for them to get off the ground, right? There was this
mhm,
combination of people feeling like, financial inclusion, access to financial services that historically, whether it was underserved populations or not, right? Obviously, we saw companies like Chime and others really take off, but there were a lot of companies that were serving more underserved populations, whether that was in Latin America, in Asia, in Africa, all of these places, or just in the US serving different demographics,
mhm,
right? And so I think we saw a lot of capital flowing into these categories because we'd seen the successes of companies like Chime and others. And it was a moment where there was so much capital flowing in the VC ecosystem that there was this ability to go raise enough money to get these companies off the ground. In
mhm,
retrospect, I think we can go back and say that a lot of them probably didn't have the unit economics that were, necessary to build a high quality business. Chime being the obvious exception here, of a company that has great unit economics, but that still required a decent amount of capital to get off the ground. But I think it was this sort of perfect storm of like wanting to believe that you could build, I don't know, 10 or 15 chimes, right? And seeing this model, and then maybe there being all this capital available, particularly at the later stages for these companies, and a sort of a lack of scrutiny around some of the underlying unit economics. I will highlight my colleague Mark did make one neobank investment, and I'm going to get the year wrong. I can't remember if it was
mhm,
2021 or 2022. So apologies, but right in that era, we did make one neobank investment, and it's gone incredibly well. It's a company called Commune, based in New York City, that's focused on Latino immigrants in the US that need access to cross-border banking, right? So they need bank account in the US, but they really care about remittances. And it's founded by two incredibly talented guys, one that came from Brex, both of them born and raised in Mexico, but have moved to the US and really understand this demographic. And they've been off to the races and growing incredibly quickly, raised their Series A from Redpoint over the summer, and is one of these companies that I think figured out that really hyper specific demographic that is both big enough, but also I think they've been able to figure out the unit economics of this business. So I'd say there as many as there are companies that didn't work, there are quite a few that have come out of that era that have worked. But I think it was sort of a perfect storm of the combination of capital availability and sort of wanting to believe that there was going to be many repeats of this that led to some of the, dead bodies along the way.
I think that's super interesting, and I wonder, so I feel like from like a global investing perspective, how do you think about like, I guess like how do you research, like do you for example, you invest in a company in Sao Paulo, like, and how do you think about like first of all like which geographic to go into, you mentioned about like Africa, you mentioned about Latin, and then there's, obviously other places in the world like Asia or South America, everywhere else. How do you kind of like pick from like a financial or like investing strategy perspective on like which part has like a better um potential outcome, and how do you think about like seeing, so for example you mentioned about like the company that your partner invests in, they have like a early employee at Brex or something like, so how do you think about like the either talent distribution or like talent, like going back to their home country or something, versus like also like building, like finding something local to just invest in. By the way, hi Livy, I want to say hi to the audience, but anyway.
I think it's a really good question. And this is something we thought a lot about as we were trying to figure out if we wanted to spend a little bit more time investing outside of the US. And we thought a lot about this, particularly in the context of 2021 and 2022. Prices in the US were sky high. Fintech felt like it was a bubble, which it turned out to
Mhm,
be, and felt like, the risk reward trade off, particularly at Series A, but also at seed, just didn't really make any sense. And
mhm,
so it drove us to think really carefully, what are the other markets we want to spend time in? And are there other categories outside of fintech where we would make a bet in another geography? And I think our answer was basically no, there are other categories outside of fintech where we would make a bet. And that was
mhm,
for a couple of reasons. One was fintech at the time
mhm,
felt to us like one of the few categories where we believed you could build a big enough company with just addressing one particular geography. For us, that meant we really basically assessed Africa and Latin America.
mhm,
And for us, we weren't quite ready to go to Asia yet. We didn't have any particular edge for why we'd be able to source companies from there. And we didn't really have a clear understanding. And versus, I think we felt like with Latin America, one, it's a little bit closer, it's more accessible, it's easier to go there.
mhm,
Two, I speak at least enough Spanish to get by. I
mhm,
don't speak Portuguese, my Spanish is decent. And so I think that made it just feel much more accessible for us.
mhm,
And then when we thought about Latin America in particular, we thought, okay, Mexico, that is a big enough country where you can build a big business just going after Mexico. And there's, of course, always a debate as to whether or not you need to get, the rest of Spanish speaking LATAM on board, whether you have to go after Brazil. That's a much longer debate. But I think we came to the conclusion that Mexico and Brazil at least could each support big businesses without having to move across country lines. So that was the first component. And then I think the second part for us was Brazil had just had a bunch of incredible venture backed successes, right? The Nubank, of course, being the star of that, but there were several others. And so for us, it felt like there were so many smart founders leaving those companies and starting companies on their own, or at least joining earlier stage businesses. And so this sort of talent flywheel that we always talk about, I mean, even in the US, right? Many of the reasons for why, I think New York has become such a hotbed for companies, especially in the last couple of years, has been so much of that, right? And LA and beyond, Utah as well. So I think we saw that same phenomenon happening in Mexico City. We saw it happening in Brazil, and it gave us a lot of confidence that there were incredibly high quality founders there that could do a lot with a little. And so that was the thesis. And our approach at Costanoa has sort of always been like crawl, walk, run whenever we're assessing a new geography, a new category, whatever it might be. That's always been
mhm,
our approach. And so our thought process with some of our investments in Latin America was, hey, let's take a crawl, walk, run approach. Let's make a couple of investments and let's see how it goes, and sort of make a basket of 4 or 5 investments and see what we learn and see how it goes, and give it a little bit of time and then decide what we want to do. And I'd say we're sort of in the like, give it a little bit of time
mhm,
phase where we made a few investments. Several of them are going incredibly well. Commune, of course, is a Delaware C Corp, but I would say we sort of put that in our bucket of things that were a little bit more focused outside the US. And like, that's been going really well. And then Malga and a few others in Brazil have been going really well as well. And so I think we're in sort of watch and learn mode right now where, and then I'd say the last component of it was we were really wanted to invest alongside local investors, because there's no way we can know enough about these markets to really have this insider perspective. And so in companies like Malga and Assis, we worked with local funds, particularly in Sao Paulo. And I think that's helped a ton. And then in Mexico, we've done the same thing. where we've invested with local funds. And I think that's been just been so helpful for us to sort of get the lay of the land. And also, I think more importantly, like really make sure that our founders have local investors that can be really helpful with some of the more hyper specific, like market specific things. Like we are very helpful investors, but there are going to be boundaries of that in the local, whatever it might be that they might need from a local standpoint. We can't always be the best partner. And so we really want to be thoughtful about that as well.
Totally. I wonder, how do you think of, so there's like couple, like, I guess, like, I really like what you said about like crawl, walk, and run, and then you make like a few bats and then like see what you learn. And like, what are some like key, I guess, like, how do you come up with a metrics that kind of can apply into the local economy?
Yeah. It's and you mean just specific to like assessing this crawl, walk, run strategy?
Yeah, and then like same as like just like for example, let's say like fintech in the US versus fintech in Latin or like Brazil, it's probably like very different from like growth perspective or like the local culture. Like how do you actually expand into the market? Like I
Yeah.
wonder like what are some metrics that you feel like are consistent and like what are something that you've learned that's like kind of surprising?
It's a good question. I think, I mean, maybe I'll talk about it maybe a little bit more on a high level, sort of this crawl, walk, run approach of how
Mhm.
we think through fintech. And I would say in the US, right, if we go back to 2019, Mark and I
Mhm.
were just starting to think through our initial fintech thesis here. And I think the
Mhm.
biggest thing that we have learned is that one, it has clearly grown to be one of our core categories, right? In 2019, I'm not sure that we would have, stood in front of our LPs and talked about our categories. I don't know if fintech would have been one of them, right?
Mhm.
Versus, for the last 3, 4 years, it has been and continues to be a core category for us. I think a lot of what we've learned though is where within fintech we want to spend our time. And much of that comes from, the metrics are sort of company success, right? Like how well is
Mhm.
our portfolio going? Where are the places where our companies are succeeding? Their unit economics are good. They're growing quickly. They're able to hire talent. Like, I'd say those are more the metrics than anything else, right? Of just
Mhm.
true portfolio performance. And look, across any vector, you're going to have companies that don't work, right?
Mhm.
But especially at the earliest stages. But I think for us, really being thoughtful of, okay, what are the categories within fintech where we've had success? And for us, that's been payments.
Mhm.
And we've really, I'd say payments sort of dates back to like pre-2019, right? Where we'd invested
Mhm.
in something earlier than that. But and I would lump High Note and kind of Kamoon as well, even though it's on the neobank side. I would sort of largely lump them into that payments category,
Mhm.
because a bunch of their business is remittance related. And then I would say fintech infrastructure, High Note probably crosses over into that as well. And then insurtech, and those have been the three categories where I think we've really learned a lot about one, how to underwrite those types of businesses. What are we most excited about? And on the insurance side, where my partner Mark spends a lot of time, having deep knowledge there really matters, and that's been a
Mhm.
place where we've had a lot of success. I would say, look, like lending has been a category where I think that was originally in that crawl, walk, run approach, and we realized that's really hard. We probably don't want to spend a lot more time there because that's a really tough category, and that was a category that I think got overfunded in ZERP era. And a lot of people learned hard lessons there. But that is one of those places where I think we realized, hey, the measures of success that we're looking for, like, just hasn't quite been there, for us, both as from an industry as a whole, and then both how some of the things that we've invested in have performed in that category. And so I'd say that's kind of how we think about, broadly, like assessing success is more at a portfolio level and trying to understand, if something's not working, what are the vectors there, but then also really doubling down on these areas where, one, we feel like we have success, and success always begets success, right? You can win more competitive deals if you've had deals that are working. And for us, I think it really makes sense to kind of keep doubling down on
Mhm.
payments, big infrastructure, and insurtech. And then I guess the last category I would throw in that's not really fintech, but maybe starts to steer
Mhm.
us in the direction of the AI conversation that I'm sure we're going to have, is I think there are so many applied AI companies today that sell to financial services.
Mhm.
And yeah, fine, maybe you can just call them enterprise software, but there are so many companies that are selling very specifically to banks and lenders. And there's so much going on in that category that I would put that into our sort of like broad fintech thesis, where again, yeah, it looks like enterprise software, but their customers are all in the financial services world.
Totally. I definitely wanna maybe we could start there since, like, you mentioned about, like, AI that sell to fintech companies or, like, financial services. How do you like, what are some trends that you're seeing in that category? And I do feel like there's so many companies that are doing something around there, either help identifying, like, I guess, like, better clients or, like, help defraud something. Like, I feel like the AI like security space is like crazy right now. How do you like yeah, what are some big trends that you're seeing in this space and how do you kind of like filter out the noise to like actually find something that's actually worth investing?
Agree with what you just said wholeheartedly. I mean, I think there are a couple of categories that it seems like I see a company every week, right?
Mhm,
One of those is certainly on the fraud side, whether that's KYC, KYB, decisioning engine, whatever it might be, right? Like there is so much going on in that space. And look, like that's a problem we haven't solved yet. And so to be fair, like I think it's really good that there are so many smart founders going after this category,
mhm,
but it makes it very hard to invest in from an early stage investment standpoint because you see so many companies that are either company formation, right? Just getting off the ground, talented, smart founders, but so hard to pick a winner at that
mhm,
stage, right? Because the only data you really have is, hey, have I seen enough of these to be confident that I'm picking the best founder? So that's
mhm,
thing one. And then thing two is like, even at Series A lot of these companies get to, I don't know, meaningful traction, right? But it's very hard to figure out how much room they really have to run. And so it's been challenging from an early stage perspective. And this is one where, I wish I was a Series B or C investor where you could kind of wait and watch and see how these things pan out. And then once you can kind of pick maybe not a clear winner, but a clear, top 3 or 4 company in this category, be able to kind of back up the truck and make an investment at that stage. But I would say generally, like, I think it's really good. There is, first of all, like, there's going to be so much new fraud coming out of all of this new AI technology that I think we can't even predict what that's going to look like yet, right? And so I
mhm,
think there's a lot happening there. Second, this problem hasn't been solved, and there's been a lot of companies that have gotten to medium scale, right? 10 to
mhm,
20 million dollars of ARR over the last, 5 to 10 years. But there's been very few like really breakout companies in this category.
mhm,
Of course, there's been a few, right? But
mhm,
even Jumio, Socure, et cetera, others in this category, we've yet to see like a really big outcome here. And maybe that's because that's not going to be possible. I don't know, but it feels to me like there's going to be a couple of winners that come out of that category. So I'd say we're
mhm,
cautiously optimistic,
mhm,
but I will say it's the category that I see like the most number of companies in. And then
mhm,
there's a bunch around general sort of how do we harness AI to help financial institutions use LLMs more effectively? And that bucket
mhm,
is massive, right? That ranges of everything from how do we use better underwriting models? How do we train models? How do we ensure that our models are like fair, right? We've seen a bunch of companies pop up in this sort of like fairness category. Um, and then there's been a bunch that are more akin to sort of revenue generation companies that are like sales enablement, right? That are pointed at lending and mortgage or just financial institutions as a whole and helping them say, hey, you sold this customer over here. How do you also get their deposits? You sold this customer this kind of insurance. How do you also get them this kind of insurance? And so, really helping loan officers, whatever it might be, financial advisors, do a much more granular approach to cross sell, upsell, helping banks understand how their, deposit part of the bank talks to their mortgage lending part of the bank. And historically, I think this has been a place where financial institutions have not done a great job. And so using AI to help with some of that sales enablement, I think is a great use case. And we've seen a bunch of that sort of on the sales tooling side. And of course, there's a lot of that going on in sort of more horizontal SaaS,
mhm,
but I found it pretty interesting that there's more of these like vertical specific solutions. And I'm personally, I think, more bullish on the vertical specific because they have to be really attuned to that specific category. And I think therefore can be a little bit more effective. Um, yeah, those are, I'm trying to think of others in fintech. I mean, those are the two that I would say I see popping up most frequently at
Mhm.
the moment. That I'm again like optimistic that there's going to be a solution there, but that as an early stage investor, it feels a little bit tricky to pick a winner at the moment.
Totally. I wonder, like, how do you evaluate if it's like someone coming from like a strong AI background that doing, let's say, like, helping the banks using better underwriting models versus like, should they come from like a banking side? Just because the other day I went to like the 500 startup down there, like they were literally like, a C level from a bank literally doing something like this. But I'm sure they have like a better distribution, but like how well is like the technology is kind of like a question. But on the other hand, there's so many people leaving, let's call it like a PayPal or like Brex or something, and then building a company in that space. I guess how do you kind of like evaluate the distribution versus the technology?
It's a constant debate. We talk about this so much internally, especially when we're assessing companies, because financial services, I think in particular, right, can be
Mhm,
so challenging to sell to. This
mhm,
is old, like a lot of these banks are still very old school. They
mhm,
really want to buy from people that they trust. And a
mhm,
lot of times that trust means that you have to come from the industry.
mhm.
But I think it's starting to shift, right? And this is again, like we have this debate constantly. And I think there are a lot more founders that are going to come from purely a technical background and be able to build big companies here. That
Mhm,
said, I think you have to be savvy enough
mhm,
to really understand. You need to go do your work, right? I don't think it means you have to come from the industry anymore, but I think it means you have to have a special skill of listening and understanding an
mhm,
industry. And I think historically I would have said, no, that actually means you have to come from fintech. Like if you think
mhm,
about hiring, for example, right? In
mhm,
fintech infrastructure, like John McElwain could not be more out of a central
mhm,
casting for sort of the type of founder that you want to back building a disruptive technology. And I think
mhm,
that's one of the reasons he's been so successful. But I think the AI era might be a little bit different, where as long as you've got that, special ability to understand your customers and talk to them really fluently in their language, I don't know
mhm,
if you have to come from the industry. And financial services is a category where there needs to be some disruption still, right? We've seen a
mhm,
lot, but there's still so much more to come. And I think
mhm,
some of that will come from outsiders, moving into the category and using what they learned in other industries to do some disruption. But
mhm.
again, I think it has to be paired with this innate ability to understand and fluently speak with your customers. And if you don't have that, you can't be successful.
Totally. I completely agree with you on like I feel like it's like leaning I feel like nowadays like technology is playing a even bigger role like to than like before since like we're in the age of AI. I hate to talk about AI, but like I wonder so like since we are talking about like the technology, I wonder you have invested in Hona, which is like a company that's like in the legal space. I see so many like there's so many vertical SaaS company happening, especially in legal and like some of these like more towards like traditional space, called like the dentist or something. Like how do you think about like from like the vertical SaaS space, like what are some AI application that you felt like are interesting? And then in the legal space, I know this one is like for like client communication portal. Like there's two bats like that are like kind of different in the legal space. One is like helping the lawyer to be more productive. And then which is like a chat GPT for lawyer. I feel like that's the vibe people are going for. And then the other part is like um, helping lawyer like with operational stuff. So how do you think about like in the age of AI, like what is like a more important things to, investing in that space? Or like in also like what are some interesting things that in the vertical SaaS space in general?
I spend about half my time in fintech, and then I say about half is sort of this vertical SaaS and an applied
Mhm,
AI category. And yeah, legal tech has been an interesting one where for a long time, and maybe not a long time, but for I don't know, 12 months or so, I had sort of said, man, it feels like there's so much investment flowing into this category. I don't know how much room there is left.
mhm,
But when I met the Hona team, they had really carved out this amazing, and niche is the wrong word, but because it's actually quite a large market, but they had carved out this segment of the market of B2C lawyers that have a very high ratio of clients to the number of attorneys that they have in their firms. So think personal injury attorneys, immigration attorneys, and beyond, right? Where you might have 5,000 cases per attorney, like something really kind of unfathomable. But because a lot of these cases move really slowly, these attorneys can actually manage that many cases. But what they can't manage is the client communication and constantly, hopefully you have never been in a car accident, but if you ever have, like working with a personal injury attorney is such a long process. It takes years, it moves really slowly, it's complicated, it's hard to understand. And a lot of times the clients want information and they don't even necessarily want a detailed understanding. They just want to know, like, what does this stage mean? What's happening? What's going to happen next? What do you need from me? And like, what can I expect from my attorney throughout this stage? And these attorneys were spending like hours on the phone, responding to text messages, talking to clients when like really what you want them doing is like actually working on the case, right? But they're spending all of their time like responding to Joe Schmo via text, being like, no, you're going to get deposed, XYZ day. Like, let me send you what you need. And so the team at Hona saw this opportunity to build a much more automated platform of one, like a place where you could log in and be like, what is a deposition? What are you going to need from me? What exactly do you need from me? Can I go fill out this form and then get feedback on it rather than this sort of back and forth of like getting on the phone and talking about it. And then you're trying to answer the same, 5 questions from 5,000 clients over and over again. And so they built a tool to manage that. And what got me so excited about it is that I think what lawyers care about in these small firms is 2 things. One, cutting costs, driving revenue, which those are basically, sort of the inverse of each other, right? And we learned that these small law firms, like every dollar that they can save on back office, whatever it might be, whether it's hiring an additional headcount to grow their firm, paying for software, whatever it is, that money, usually goes into the attorney's pockets if it doesn't, or it goes into hiring another attorney instead of hiring back office staff. And so for them, these attorneys were so aligned with this software that it got me really excited about that category. And it felt very different than much of the other software that was coming out of the legal tech industry, which to your point, a lot of it was around sort of, hey, how do we replace lawyers? And this is the opposite, where it's, how do we enable these lawyers to grow their practices and actually be more effective and spend more time doing what they really want to do, which is ideally, solving these cases for their clients and winning settlements for their clients, especially at these PI firms. And I think that alignment with the customer and what they really want was the secret that got me excited about Hona. And I think, they've had a fantastic year since we invested back in April. And I think that alignment with the customer has really been clear. So that's on the legal tech side, but I'd say sort of more broadly on vertical SaaS, we've just been thinking a lot. And I would say the verticals where we've spent the most time are healthcare. And that's pretty broad ranging, but healthcare, whether that's sort of using AI to get better at scheduling inside of skilled nursing facilities with companies like Cavala that we've invested in, or on the healthcare side, thinking a little bit more about healthcare data. How do you clean and more effectively use AI to access healthcare data? And then lastly, I think, there's a lot of other verticals, whether that's shipping and logistics, legal tech, of course, where we feel like there are so many day-to-day tasks that would historically get sent to either BPOs or or outsourced in other ways that can be solved with generative AI now. And so that has been the other category where we've been spending a lot of time and really trying to understand where are there places where you can build a vertical specific solution, that you can build a big business where historically the access to enough revenue to build a big company, so much of that would have gone to services firms. And I think what we believe is that much of that services revenue is now accessible as, AI revenue, and therefore can go to software businesses in a world where historically it wouldn't have. And we think that's going to open up the aperture for much larger vertical SaaS companies than what we've seen in the past.
Totally. I want to go back to, you mentioned about like, helping attorney maximize the revenue, save some time. How do you think, like, first of all, like in the lawyer industry, like how much money do they even spend on software? Just because I feel like the lawyer that I've like interacted with, they're so tech not advanced. Like it would be literally like a person taking notes. Of course, like I mean, I'm not very like frequently visiting a lawyer or law office, but like the past experience I had where like, either you're on like a back in time, there was, like, a company that's not legal Zoom, but, like, what is it called? I'm so sorry. Up Console. Like, so let's say you find, like, an Up Console equivalent. I know that they're still like, another company. I don't really know where they are now, but, like, let's say you go to Up Console, you find, like, a lawyer that's, like, kind of like a Yelp for lawyer, right? And then there's like or like Upwork for a lawyer. And then there's like also like, like but the traditional lawyer is like, okay, you call someone on Yelp and then like they're like, hey, let me take down your information. And you gave them like your most detailed personal information ever. And then and then like, you receive like a mega potential like, invoice or something. And then so like but I wonder how does that kind of look like in the technology world? Like since like, there's like this company that obviously does a lot of communication and I wonder like how does like lawyer even spending money on this? So for example, do they shoot for like let's say for Hona, like seems like they have some big name law firm on there, but also like, since I feel like most law firms are like kind of like SMBs to a degree. So like it's just like a bunch of people you have to land as a client. Do you go to like some sort of like legal association to land the clients, or like do you just call like let's say your dad has a law firm, his friends, like how do people even start in this kind of like selling to the legal space?
I think you'd be surprised. I mean, look, your point is obviously not wrong that a bunch of law firms do not use a ton of technology.
Mhm.
But I think you'd be surprised how excited, especially SMB law firms are at
Mhm.
the idea of using something that can actually make them much more effective in their jobs and drive revenue. That's all that is to me, that is like deep customer alignment with the customer goal. Like
Mhm.
they want to be able to go home earlier and make more money and have more efficient law firms and have happier clients at the end of the day. Like that is ultimately what they care about. And I would say this is where like B2C law, I think, is very different than B2B corporate law, right? Like big corporate law is billing hourly. Like they actually might not want to be more efficient at their jobs because that means they might bill fewer hours, right? And maybe that's terrible to say, but like that is one reason why I think Hona is built specifically going after B2C because that's where time you're not billing on a per hour basis. You're billing and usually you're taking a percentage of the settlement in the majority of these cases or you're usually on a flat fee retainer, whatever it might be, right? And so the alignment between what the goals of the client are and the goals of Ahona is so, inextricably linked in a way that I think doesn't exist in some of these other categories. That's one of the reasons we got so excited. But to answer your question around how they sell, so as a company based in Salt Lake City, and they have really built a very talented sales force. And a lot of their sales have been outbound, right? Like we joke, the founder will be in a city going to a trade show, and they go to a lot of these trade shows, but he'll just go knock on doors, right? He will just go and walk into law firms and say, "Hey, this is what we're selling," and he gets demos a pretty high percentage of the time. Like people are excited about this idea of being able to cut down the number of hours they're spending on this because it's not something they want to spend time on. And so I think that alignment really exists in a way that you wouldn't expect. And I think these SMB law firms are using more technology than you'd expect. Their spend might not be high, but they're all using a case management platform. And some of them are, it's interesting when we talk to customers, like some of these small law firms are actually very tech enabled and they've built their own solutions for a lot of stuff that you maybe wouldn't expect. Of course, there are plenty that are less tech enabled as well. But again, I think the sort of outbound nature of their sales strategy, plus this alignment with what the customers really want has worked really effectively for them. But yeah, it's been a outbound sales motion. And they've, I'd say they have a really good mixture of sort of larger law firms that fall more into enterprise category, plus many in this more SMB world. But that outbound approach, I think, has worked really effectively for them.
Wow, that's so interesting to think about. Do they spend a lot of money on the software, or like, do you feel like the software are like, I feel like tech priced? Like, by tech price, I mean like literally think about
Yeah.
like a Dropbox or something like $10 per month,
No,
right?
no,
Or like
it's
are they?
I would think of this as a much higher percentage of spend than something like that. And I think part of that is because, like I said, it's so tied into helping them drive revenue that they have pretty meaningful ACVs. And look, I think the unit economics of a business like this, if you're doing outbound sales, don't work unless your ACVs are 5 digits at least,
Mhm,
or high fours. And so that's been kind of, again, it varies with Hona across the scale of the businesses that they're working with. But no, they've been able to drive pretty big ACVs. And that was a big part of our thesis was, wow, if people are, the willingness to pay is really there. And that I think means that there's willingness to pay for add-ons eventually as they start to expand into other software modules over time.
mhm,
They're in the midst of building a couple things that'll come out in 2025 that we're really excited about, and
mhm,
several of them, utilizing AI, we think quite effectively.
mhm.
Um, no, I think the willingness to pay it was surprising to me as well, but I think it's there more than you'd expect.
Wow. So like I wonder, let's say if a company that generates like $1 million revenue, like after like first year after launch, like is that good or not
For vertical SaaS in general or for legal tech?
for legal tech?
I think it depends, right? It depends on how they got there. It depends on how happy their customers are. But I mean, look, I think the bar on our end for Series A is what we've been seeing is 1.5 to 2 million of ARR, sort of across all categories right now. Of that kind of being and getting there in a quick manner, right? You're
Mhm.
probably getting to that in 12-ish months, something like that, maybe less. But yeah, I mean, I think I don't know that I feel that legal tech from a metrics perspective is meaningfully different than anything else in vertical SaaS.
Mhm.
I would say application layer SaaS versus infrastructure feels really different, right? And certainly the
Mhm.
bar is very different from a revenue standpoint. But for anything in sort of horizontal or vertical app layer SaaS right now, that 1.5 to 2 million of ARR sort of feels like the bar from our perspective. And of course, quite an achievement for those companies to have gotten there so quickly.
Wow. So like that's good to know. I feel like this industry is like just like there's so many startups that are coming out of the space. It's like insane. And then yeah, I feel like it's always interesting to take a look at like, you know, the people who are like building the software versus like the people who are like replacing lawyer or like half like helping lawyer to be more efficient. Do you feel like there will be one of these days that like people just use like a ChatGPT equivalent and like done? Like, how do you think about this?
I think it depends on how far into the future we're looking.
Mhm,
Not anytime in the near future, I do not think. I think so much of the value of services, right? I mean, I would actually lump this whole conversation, I think, can be had across a bunch of verticals, right? It can be had at the legal level, it can be held with, maybe like some primary care
mhm,
doctors, it can be had against, radiology, a lot of these businesses that I think we're seeing so many companies pop up trying to disrupt. But if you really think about what the value of a radiologist is or a lawyer, the value there is so hyper specific, and so much of it is actually your personal relationship that you're having with the person. And so I think it's very unlikely that they get completely disrupted. Do I think that some of the lower level stuff that they're doing gets changed by technology? 100%. But I think the relationship that you build with that person on the other end is usually the most important part of that entire like services model. And I think that part's going to be really hard to disrupt away, because there's always going to be edge cases and you're always going to want someone's opinion. But I think the lawyers and radiologists and doctors and all of these, sort of services industries and accountants, right, as another category there, I think the best ones are going to adapt and get really good at using technology, and they're going to look a lot more like a tech-enabled firm than they are just a software company. At least that's my view for the next, I don't know, 10 to 15 years, something like
mhm.
that, because I think the value in that relationship is just too significant for it to ever go away.
Totally. What's your thought on Harvey?
don't know too much about them, to be honest. I think that's one that clearly got out of the gates incredibly strong, right? With what they were building, got amazing traction. But it's been interesting. I think this falls into that category of, these AI companies that are able to get so much quick early traction. And I don't have a sense for what their performances looked like recently, but I'd put that in the category of kind of, AI LLM like 1.0 success story that I don't have a sense for what their trajectory has looked like over the last, few months here.
Totally. Okay, so maybe we can talk about other part of the, I guess, like vertical SaaS area that I know that you invest in another like maybe we could talk about the San Paulo companies since that will hit both of like, the global investing as well as like the general like, like investing in general. So like I wonder, so for example, for to invest in a global company, like you first maybe identify some sector that's like really interesting. Maybe we could can you just walk us through like how you invest in assist? I think that's how you pronounce like in
Yeah.
case.
Yeah, well, that's a great one because I think it combines kind of the AI world that we're just talking about and then global investing. And so this is one that we invested in back in 2022, and they are building, think kind of prosumer honeybook type platform. So
Mhm,
focused on very small businesses,
mhm,
usually one or two people, whether that's a wedding photographer, a florist, might be a one attorney law firm, these like SMBs, and often kind of prosumer type profiles that are primarily in Brazil that
mhm,
want the ability to have an assistant but can't afford to pay a human being to do the work. And
mhm,
so the team at Assis, it was a second time founder, had built another business that he had sold for pretty decent amount of money, had a very successful exit, and had not raised much capital for that business. And they were building in this assistant category, and then realized they could build on top of WhatsApp. And so the theory was, hey, I'm a photographer. I'm really busy. I don't have time to follow up with all of my clients. I'm probably missing out on revenue because I'm not doing a good job following up with every single customer that I do, that I send, whether it's a pamphlet to whatever it might be. I'm sending information to someone, they come to my website, but I'm not following up effectively. And in Brazil, so much of this business is through WhatsApp, right? Like almost everything goes through WhatsApp. And so they built this really exciting AI assistant that sits inside of WhatsApp and helps these small business owners to get better at their jobs, whether that's it automates scheduling, it automates responses. You can sort of build in so much of this in where you can say, hey, I want you to go schedule an appointment with the last 5 consultations I had for photographers. Like, go follow up with every single one of them. If they want an appointment, schedule it. If they want more information, send it to them. And so it really creates this ability to get leverage out of technology, where before, like, these are small businesses that are making a decent amount of money, but probably not enough to hire a human being to do a lot of this work for them. But it's really making it challenging for them to get that leverage that they so desperately need, because most of them like don't even have an effective calendaring system, right? Like a lot of these are just, they're not even paying for, whatever it might be. They're certainly not paying for a superhuman or a VimCal or something like that. They're doing most of it inside of a Google suite or an Android suite. And so enter Assis, they've been, I think really well received by these small businesses as this built-in assistant that's already in their workflow. They don't have to change anything that they're doing. They can just loop it right into that. And so I think this goes back to the conversation we were just having about vertical SaaS and vertical and horizontal SaaS, where it's automating things that look a lot more like a true service than it is necessarily saying, hey, come pay with this software and you're going to have to change the way that you're working today into kind of the way we want you to work, versus Assis really like meeting them where they are. And that was one that I think we were quite excited about, that vision in particular, because interestingly, Brazil is a country where lots of people work for themselves. There is a really high percentage of these small businesses, more so than even the US. And a lot of these people are, a one-man band, right? And don't have the help that they might need, and are spending so much of their time on these sort of low value tasks that could be automated. And I think that both in Brazil and in the US and across the world is going to be so much of the story of the next, 3 to 5 years is so much of that stuff getting automated away, regardless of kind of what vertical or vector we're talking about.
Mm. I love that. Like, I feel like there is so many, like, I wonder, like, another question just to piggyback on the small businesses. Um, I wonder when you're thinking about like investing, what are something that you feel like should not be a part of the things that you would look at? Just because I feel like the SMB SaaS space is like just so like uniquely like diverse. There're just like so many things like, every day you could see maybe like a call it like a back end Shopify shipping things or like, helping company book something. Like there's so many problems that like or like even like I've seen people build like successful like barbershop B2B SaaS that only for a certain type of hair. So like how do you think about things that like you should not spend time on in the SMB space?
Yeah, SMB software is tricky. I mean, look, I think the most challenging thing about this, kind of going back to what we were talking about with Hona, is figuring out a category where you can extract enough revenue to actually build a big business. And so for me, there are many categories where I think we've seen a lot of, dead
Mhm.
bodies in the venture ecosystem. One of them has been around finance and accounting. Like there have been so many companies trying to help
Mhm.
SMBs better at whether you want to call it, financial health, whatever it is, financial
Isn't
pl-
another company just died like this past week and
yeah. Yeah.
yeah,
I mean,
I
there's
don't want
so
to I
many.
don't want to name names, but it was
There's there's so many. And I think what's so hard is that I want to believe this too. Like, I think we all want to help these SMBs get better at managing their finances. And there should be a way to invest in that. But I think my hypothesis is maybe changing on that category because of what we were just talking about around AI. And I do think there's maybe a world where if you can build a much more automated accounting solution, the willingness to pay might be there in a way that it hasn't been in the last couple of years or the last few decades where we've seen a lot of failures there. But that has been one category that I've sort of steered clear of just because it feels like getting to people to pay a meaningful amount of money there is just so challenging. And so we've stayed away from that. And I would say generally in SMB land, I would say for us, I usually stay away from it unless you've got a specific vertical insight. And so companies like Hona, I think really make sense because we know they've built this vertically specific solution that can go after this. And then, on the healthcare side, invested in companies like Kavala that are here in the US, and some of their customers are on the skilled nursing side. And those, SMB is probably not totally the right word, but they're certainly smaller businesses. But we think that what Kavala is selling is so mission critical, right? Like one of the most important things in running a skilled nursing facility is understanding your schedule and making
Mhm.
sure you have the right staff in the right place. And so I
Mhm.
think there's this mixture of sort of like, how do you find something that is a critical enough pain point that people are willing to pay for it? And then how do you go after it in a way that it's so solving that problem that you get some of that services revenue as well. So those, I'd say kind of legal and healthcare, that's how I thought about it. And then on the SD side, theirs is so broad reaching that I think you get access to a wide enough swath of small
Mhm.
businesses that the cost your ARPU matters a little bit less,
Mhm.
right? Because you have such a big number of businesses that you can go after. I think where you can really get into trouble is vertical specific and low ASP. That feels harder. I'd rather have, horizontal play that's lower ASP or higher ASP, really verticalized solution. Like those two options are good. Somewhere in the middle starts to feel really hard. And so that's been part of the math of just thinking through like, what are the types of businesses that focus on SMBs that fit, one or the other of those like archetypes.
Wow, I love that. I think like that's really important. Like one is extract enough value, and then the other part's like critical enough to solve the pain points. I love
Exactly.
that. I think like a lot of times like when we're looking at like a 600 different startup, it's like it's kind of like a losing track on the important stuff. So this is like such a great takeaways. I want to be mindful of the time, so why don't we end with like a quick 1 minute fire round here?
Sounds good.
So what's your favorite book?
Um, maybe not my favorite, but one that I just read
Mhm.
was Demon Copperhead by Barbara Kingsolver in the fiction world, but a really great story.
Wow. Who would you invite to your dinner party?
Maybe only because he just passed away, so he's on my mind, but Jimmy Carter.
Who made the biggest impact in your career?
The man, his name is Ron Adler, who was my internship sponsor for my first internship at JP
Wow.
Morgan, very, very long time ago, and we're still in touch, and has been a really, really strong supporter of mine.
Where can we find you outside work?
Online, reading about AI.
Give us your social handle.
Just kidding. Just kidding. Reading, I read a lot. I'm a really, really voracious reader, and then doing anything outside, skiing, running, biking, walking, anything to get outside.
Amazing. Wow, Amy, thank you so much for coming on the show. It was such a fun conversation.
This was awesome. Thank you so much, Grace.
Let me quickly end stream. Sorry.